All right, we're going.
All right, cool. Well, while that's loading, I'll just briefly talk about the Euro GBP. So I showed you guys this in the chat room. Let me pull up GBP real quick. Okay, so kind of the same thing happened on the Euro GBP as well as the GBP USD. The only difference is that GBP went to a manipulation point and Euro GBP went to a supply zone or a bearish order block. So I don't know if you guys watched that video I put out or not, but basically, short and sweet, we got the Sundays open. All right, we had a gap down, a decent sized gap down of roughly like 40 pips or so. So 9 times out of 10, what will happen on Sundays open is when they gap up or down. A lot of the times they will quickly recover and then either continue higher or go lower, right? Obviously, because they only go one or three ways. But in this case scenario, it didn't fill, okay, and then it continued going lower. So the first low that I thought would work was probably this one, okay. And then I thought to myself, well, I don't know, because then there's another kind of low right here, and then the only major low is down here. You see, like this major swing low, right? So that comes in right there at about the 2,800 whole number. Okay, that's when we annotate that, right? Because everyone who's long, right? Because if you look at the higher time frame, there's a high, a low, and then a higher high. Okay, so this right here, up into Sunday's open, technically is an uptrend, right? So you say, okay, well, if people went long down in here or down in here, and they're trying to ride this uptrend, well, where are they going to have their stops? All right, they're going to place it at a major low or a little bit below that low, right? They're going to have the sell stops to catch price going lower, LOL, because that's not going to happen. And then they're going to have their stop losses here in case it does head here and head lower. Again, LOL, because that's not going to happen. Especially with this gap needing to be filled. So what I expected for price to do was come below this low, buy it, and then it was what my honest to God opinion was that it was going to casually come back and maybe take all week or all into next week. Or all into next week to come back and fill this gap. But for whatever reason, market makers couldn't hide their footprint. Okay, because look at that. On the 1 hour time frame, we jabbed right into the that low, that swing low, 2,800 down to 2,780 something. Okay, and then look at that explosive move. Bam. And then where do we get to? Price goes right back to that gap fill where we expected it to go. And actually a little bit past it, which is pretty cool. Left some extra pips on the table if you want. But if I had a pending order, if I was trading Forex and I had that pending take profit, that's where it would be, is right at that gap fill at 29.50. Okay, it's a mid figure and it's a gap fill, so that would have been perfect. But it went as high as 29.80. Yeah, 29.80, so a little 30 extra pips on the table. But as long as I can capture 80-90% of this move, then I'm happy. Okay, that swing low up to that gap fill was 150 pips. So I don't have to catch all 150. Or the most move, which was from the very low to the very high, was 196 pips. I don't have to catch 196 pips. I'm okay. I don't need all that. If I could get at least most of it, from the swing low to the gap fill, okay, is 150 pips. So I'm cool with that. Or even if I got in really late and got out early, that's still a little over 100 pips. So it's fine. But that was the play of the week on GBP USD. Okay, and I missed it because my sell was at 27, or excuse me, my buy was at 27.75, which was a little bit down here. So I missed it by roughly 10 pips. A little bit less. It was like 9 pips. And sometimes the market just doesn't hit. But that's only because Nadex weekly options, because I wanted to play this for a weekly option, it didn't hit. and their options contracts are every, I think, 50 pips. So it would have been 28.25 and then 27.75. So I picked the lower one because that one obviously has a much higher probability of expiring in the money, but I didn't get it, so it is what it is. Euro GBP, same scenario, okay, but we don't really have a swing low, okay, or a swing high, excuse me, because this price gapped up, okay. There was no swing high. That swing high is way up here, okay, and price was not going to go all the way up there. That's not going to happen. So we get our gap up, okay, and we have like I guess you could call this a short-term swing high. Okay, and maybe what happened is that traders, right? They saw this and then started trading sideways. So maybe people got in, right? They're like, okay, I'm going to short it because it's got to fill this gap. All right, and this is why I love manipulation so much, because the market said, yeah, I don't think so. Okay, it started to head lower, right? And traders are like, oh yeah, I'm in profit. I'm going to sell it. No. Okay, market spikes right back up, right? Boom. So these stops, right? Because they're going to have their stop loss set at break even, or I don't know, however many number of pips above the swing high, right? And so those got taken. All right. Now with that, also smaller time frame order block, okay, comes in right here. I'm gonna zoom in. All right, can you see that? You see that 1 hour up candle, right? Decent sized body, but what qualifies this candle, okay, is this move right in here. Nice, strong, okay, quick down move. All right, that continued for a little while. All right, so that's where we annotate that order block. I think I'll make it bearish, just so if y'all rewatch the video, you can make sure y'all get this right. Okay. So that bearish order block, the beginning comes at 90.51. Okay, so that's literally 1 pip away from the mid figure at 90.50. So if you want my opinion, 90.50 would have been my sell. And 90.50 is a mid figure. It's been traded through already, but since it's right next to that bearish order block, I would consider using it. So there's your sell right in there. Okay, and then same scenario from GBP. As soon as we get up into this 90.50, immediately gets rejected, and then boom, it goes all the way back down to where that gap fill. Okay, which comes right at 89.60. Okay, so that's where you would have your take profit, or if you want to buy into it and ride it up, you could do that. But obviously, if you had went long here, there really wasn't that very many pips to begin with to get off the table. So the prime trade would be to sell. Specifically for, the number one reason specifically for is to fill this gap. That is it. Okay, I wouldn't hold it for much longer than that. Even though if you held it longer, you'd be in more profit, yes, but it's just, this is like a quick in and out, highly profitable trade. 90.50 down to the gap fill was roughly 90 pips. Okay, so that was 90 on Euro GBP. That was 150 on GBP USD. So now you just day traded and made over, what is that, 250 or like 240 pips in a couple of hours. Like, come on, nobody can do that. Nobody knows how to do that shit. Anyway, let me see if this is loaded yet. All right. Is this the right one? Okay. You guys still with me?
Yep.
You guys can still hear me? Okay. Just making sure. All right. So basically, I'm gonna send this to you guys, but I'm also gonna go over it just a little bit as well. So there's not too many questions when you guys get this. Back. All right. So trading plan 2018. The number one bullet is obviously to manage time wisely. which comes back. That's why I said, I've had sleeping problems, and in order for me to be the best trader that I can be, I gotta stop sleeping in. So that's just me not managing my time to the greatest extent. But it's the weekend, so I can't trade, so it's not too big of a deal. But um, each scenario is different for every person, like I said before. So you guys have different jobs, or you might be a stay-at-home person, or whatever. But whatever your lifestyle is, you gotta manage that time wisely in order to do the things that you got to do, like trade forex or whatever. So managing time wisely, that's going to have to be on your own, but that's one. Don't focus on money. Focus on points and risk management. So again, that's kind of why my trading is a little bit more specific because now I'm managing my entries, and that's going to help me manage my risk. Because once I'm getting in at a high probable level, I can minimize my risk because now I'm only going to place a 30 pip stop loss versus selling at the gap and then holding on to this drawdown and then getting a little bit of profit. That's just dumb. Okay, but if I find high probability entries, that's going to cut my risk down and it's going to maximize my profit, right? Because had I sold at this 90-50 level, it went as high as 90.51 and a half. So less than 2 pips of drawdown, an immediate 98 pips of profit. So that's just amazing. But that's what you want to do, okay? And like I said this before, you don't want to have more than a 30 pip stop loss unless you're trading on a weekly time frame, okay? Maybe. But yeah, so that's in there. Don't focus on missing trades. It happens. Yeah. That's one of my biggest things as well. And I know I've talked about that in the group before where I said, yeah, I miss trades all the time. There's probably trades every day on some pair, but, I miss them. I have work too. I have a life as well, and I don't cry over spilled milk. My GBP trade, I told you I missed, right? I never got into it. Price didn't get to where I wanted it to go, and unfortunately, I missed out, but that's just how the market is. And so now I'm just looking forward to next week and seeing what happens. Um, this is a little bit more professional, but 2% risk per trade is pretty standard amongst the like professional side of trading, I guess. And then with that, a max of 4 trades open at one time, and out of those 4 trades, pairs should not correlate. Okay, meaning I shouldn't buy the dollar index and then short the euro. Okay, you're basically trading the same thing. Okay, so you would essentially double up your risk by doing that. So if you have all those trades open, they shouldn't correlate because now you're just doubling your risk. But if you do the math, 4 trades open at a time at 2% risk per trade, you're risking about 8% of your account, which is pretty large. But again, that's kind of up to the individual. All right, and out of those trades, all right, all 4 of those trades, your risk to reward minimum should be 1 to 2. Okay, so if I'm risking, I think I went over this before. If I'm risking, I don't know, say this number of pips, right? Whatever that may be, then my take profit has to be at least twice that. Okay, you always want to risk less than what you want to make, right? Risk 30 to make 60, or risk 30 to make 90. All right, that's the minimum. Preferred is 1 to 3 and higher. Okay, so 1 to 3, 1 to 5, 1 to 6. Okay, and that's what's going to make you a lot of money. Okay, not 1 to 1 like options most of the time. But anyway, here's one thing that a lot of people don't do, and really I don't trade like this anymore because I always have a take profit. But if your analysis changes, during the trade and you want to switch things up, then you can, like a trailing stop loss or whatever. But a lot of the times, what I like to do, okay, is after 30 pips of profit, My stop will be set to break even or condensed exposure risk to initiate risk-free trading environment, okay, or creating an environment to allow less of the original stop loss. Okay, so for example, if I watched GBP USD and I took this trade manually on my Forex account, right, and I didn't have it take profit for whatever reason, which is silly, but let's just say I left it, okay, and I didn't have it anymore. If I got in at this level, right, let me take some of this stuff off of here. Okay, say I put in my buy down here, all right, and now price is trading higher. Well, what I'm gonna do now is say place my stop loss, say down here. Okay, so now no matter what, I'm sure you guys have probably had this or have known about this before. Okay, this is about 52 pips. All right, so no matter what, now I'm guaranteed 52 pips, no matter what. So now instead of risking, I'm guaranteed profits. So now I just let the market go, right? Say I zoom out and I'm like, you know what? I got in at a really good, extremely low price, and price is continuing higher. Maybe I'm gonna hold it. Maybe instead of taking profit, maybe I'm gonna hold it, and I think price will come up to here or whatever. Then you just let the market ride. That's something you can do if you want. But me, I'd rather just set my take profit, take the 100 pips or whatever it is, and then walk away. But there are scenarios in the market where, you know, if you hold the trade longer, then it will go for a couple 100 pips. But that's kind of a long-term analysis, and there's really too many factors to determine super long-term trends, at least for me. So that's not really something that I do. But yeah, that's pretty much the same thing right here. Trades 60 points in profit that haven't taken profit. Stops will be set in profit at user's discretion to initiate guaranteed profits and eliminates any exposure risk. So yeah, it's basically the same thing. Guaranteed 50 pips and nothing less. So you're in a risk-free trade, and that's really good for your psychology because now you can go to bed and you're like, well, if the trade goes against me, I still make money, so who cares, right? Or it goes higher, whatever. So it's really good for some traders who don't have their psychology down 100%. Okay. Another point right here: be patient. Allow the market to work for me, and not the market to work me. Okay. And really, that one it's really hard to explain because the market is working traders, right, by taking their stops. That swing low, that's the market working against them, okay? But the traders who got in here and are allowing the market to push price back up, right, the market is working for you, not against you, right? Kind of like that saying, the trend is your friend, right? You got to let that overall trend take over, okay, and allow the market to work for you, right? Those dollars that you have in your account, you want those dollars to work for you, not against you. All right, pretty simple. Hedging a losing position is prohibited. All right, that kind of comes down to making sure that, like I said this before in the group, that every time you take a trade, you got to have a few things in mind. You got to have your stop, your entry, and your take profit. Okay, if a trade goes against you and it's reaching towards your stop loss, don't move your stop loss. Okay, don't move it down another 10, 20 pips or nothing like that. Just leave it alone. Okay, if it gets hit, it gets hit. All right, and to be honest, with the way that I trade, if I see price coming towards my stop loss, I'll probably go ahead and cut it early just to save another 5 or 10 pips or so. Because a lot of the times, the way that I trade, I'll get an immediate reaction and I don't get a lot of drawdown. So if I'm getting 25 pips of drawdown, I might as well just close out the trade. Take my little 25 pips and then move on. Or take my 25 pip loss and then move on. Okay. Our next point, scaling in is is allowed but not recommended. 2% risk combined, 1% first trade, and 1% second trade. Okay, so that basically means, let's say, same scenario. I'm on GBP USD and I see price coming down, and I say, all right, I'm gonna play this back up to the gap fill. But I never went through John's class, and I don't know what the best possible entry is. So I'm just gonna buy it wherever the hell I feel like buying it. Okay, so you buy it down here, or you buy it in the middle right here, and then the price is still going against you, and you're like, oh well, shit. What do I do? What do I do? So then you take another trade. Okay, take another trade down in here, and then now you're in profit. That's great. This is called scaling in. Okay, now Forex doesn't really do this, but in stocks you have what's called an average price. Okay, so if you bought, let's say, a standard lot for whatever reason, you threw a standard lot in here, and you threw a standard lot down here. Your average price would be the middle of this, not just two open orders, but that's neither here nor there. But that's basically called scaling in, okay? Or dollar cost averaging, whatever. It's all the same shit. So basically, instead of just throwing 2% on this trade and then another 2% on this trade, throw 1% on this trade. You cut your risk in half, okay? And then you throw another 1% down in here for a 2% total, okay, into the market. And then we're in the profit, obviously, on this trade. But again, that comes back to your entries, right? I would never enter in this price. Okay, a low hasn't even been taken yet, and that other low is way down here. So, what the fuck are you doing? Over here? That's just beyond me. But anyway, that's scaling in. That's really more for stocks. I don't really scale in on Forex, and if I did, it'd probably be like, I don't know, 5 or 10 pips apart. But whatever. Okay. Next point. Trades that may seem to go longer term can take partial profits and let the original trade ride. Okay, so that's basically where, let me use the same scenario again because I don't feel like pulling up other charts and stuff. Let's say we got in at our buy, okay, and oh my goodness, and price is trading higher, right? And so you're looking at the chart, and then you're looking at the overall trend, right? And you're like, oh shit, this may go higher, but I also want to take profit, right? You want to take some off the table. So let's say you have a standard lot, right? So instead of closing the standard lot, you can close like a 0.8, right? That's about 80% of your position, and then you let the rest of the 0.2 go on further into profit. Okay, so you at least have some money in the market moving for you, right? That's not really something that I do often, just because, like I said, I like to have a specific entry and a specific exit. I generally don't like to let trades go in for the long term, okay, unless it's for stocks. But stocks generally go up for the most part, and Forex really is a lot more all over the place. So in Forex, not so much. All right, here's a good one that you guys should definitely pay attention to. If level 3 or other economic news events are about to occur, trades that are less than 30 pips of profit will be closed out. Trades that are more than 30 pips profit will remain open, and the stop loss and profit will take place to avoid risk exposure from the news whipsaw. Trades left open have potential to move further in profit direction, but can play with profit points, not original account points. Okay, that's a doozy right there. Basically, if we say we get into this trade, all right, and then we look at our forexfactory.com, and we're like, oh, in 2 hours, GBP has level 3 news. Well, what do I do? Well, if you're only 10 pips in profit or 10 pips of drawdown, then get the hell out. Because this may not have been a news event, a news candle. I don't think so. But if it was, imagine if you were short. Right? You were short, and then that news candle, bam, went right against you. you're going to suffer a lot because that 30 pip stop loss that you had, that you're supposed to have, right? That 30 pips now is probably like 40 or 45 because now you're going to deal with slippage. Okay, you're going to deal with a higher spread, and your order is going to be slipped a lot. Okay, I don't know if all of you guys know what slippage is, but basically it's where, if I have my stop loss here as a short and price jabs up that quickly, I might not get filled till about up here. Okay, so I was risking 30 pips, but I took a loss of 45. All right, that sucks, especially on a standard lot. Oh God, that's a lot of money. All right, but news events is just not something that I trade personally. Okay, so anytime I see news coming up, I just really stay out of the market. All right, and that really kind of comes back to um, managing your time a little bit. You want to know what's going to happen for the week. You want to be aware of all the level 3 news. So what I like to do most of the time, matter of fact, I'll do it just to show you. As I'll go to Forex Factory. Some of you might not know this, so this is pretty cool. If you don't, if you go, this might not be it. There's a filter on here. Oh, here it is, right here. There's a filter, okay. And so what I like to do is take off the yellow and the silver, and that just leaves the level 2 and level 3 news. Right, and if I apply it, that'll only show me for the week, right? Because this is September 9th through the 16th, so this is today up until next week. It's only going to show me level 2 and level 3 news, right? Or if I go back to the filter, I do just level 3 news, all right? So now we have a very condensed list, okay, short, sweet of what's going on, okay? So look at tomorrow, 3:30 a.m. That's my time, okay? There's manufacturing production and whatever this is, okay? And then there's also GBP news on Tuesday, okay? So I probably won't trade GBP on Monday or Tuesday, all right? Or Thursday or Friday. Because there's Governor Carney speaks, there's bank rates, monetary policy, there's all kind of shit going on with the GBP USD this week. So you got to be aware of something like that. So I would probably just stay away. That's just me, though. Me personally, all right? I would just stay away. All right? So that's that. So obviously, one of my favorite parts, charting, okay? Very first point, when analyzing charts, move from the weekly, daily, 4-hour, 1 hour. Okay, so that's basically what I talked to you guys about, okay, the top-down analysis, all right? What you want to do is start from the weekly and then move down, all right? So obviously in a weekly, we really don't have any order blocks close by. We do have some swing lows. Okay, there's a swing low. The next swing low is down there. All right. So we can see that GBP kind of swept that low, and now it's starting to head higher. So we may be bullish, all right, long term. But then we go down to the daily or the 4-hour, and we match it. If we were bullish, right, we got long on the retracement, right, from that, especially from that gap. Longer term, we can say, okay, well, we might hold this trade. All right, but that's just an example. And then you want to go down to the 4-hour and the 1 hour for whatever asset you're trading. All right, you always want to be aware of what's happening on the weekly and daily. Okay. So point number 2, mark up order blocks or supply and demands. Or same shit. Mark order blocks, case bearish and bullish order blocks. All right. So in this scenario, I would have had at least that marked up, right? And that's been traded through already. So whatever. Our next weekly order block, I would say, really isn't until down here. Okay. So I'd probably leave that there on my charts. then I'd probably move down to the daily. And there's really no clear order block other than that one. This might be a potential, maybe. So we'll see. But basically, you just want to have those marked up, okay? And I don't know if I showed you guys alerts on TradingView or not, but you can set price alerts. If I take my horizontal line and I draw it up here, right, and I say, okay, if GBP crosses this, I want to know about it. So you set an alert. You don't have to really read all this shit, but basically it says, it's going to cross the horizontal line, expiration, whatever, and then it's going to play a sound, show a pop-up, and it's actually going to send you an email. And what's really cool about this is that I utilize this a lot for my options and my stocks, but basically you can write yourself a message that literally will be emailed to you. So you say, okay, GBP short above 1.31440. Okay, so then that's the email you get to remind yourself, oh yeah, I'm going to short the GBP above this level. All right, so you can do that if you want. And I do that, but that's on a smaller time frame, not like a daily. That alert is going to be sitting there for a while. So they're really, I set mine for like swing lows and swing highs, especially that one over here. And I actually had another one at the 27.75 level that I never got. So, and on TradingView, if you go up to the top right, you click on alerts, and all your alerts are going to be over here. Okay. I deleted mine because I got pissed off. My GBP trade didn't go through, so I deleted all of them. But anyway, moving on. Check RSI for divergences. Not really something I do too often. I want to say I did check on the GBP for the smaller time frame. Something like this. So that swing low, right? And I know I've said this 100 times. About this damn swing low. But if you didn't have that in mind, you could say, all right, well, there's a lower low right there. Let me delete this one. Right, there's a lower low right there, and the RSI is making a higher high. So you could look at that and be like, okay, that's a divergence. Let me blow this up a little bit so you guys can see. And I don't know if you guys are too familiar with divergences or not, but that is a divergence. So you could say, okay, well, screw the swing low. I'm just going to look for a divergence in the market. Well, there it is. There's your scenario. But again, it's really just extra analysis, okay? Because divergences aren't always very clean. Like this one, to me, is not very clean. But they do exist. All right. So if you have known divergences and you know how to use them and how to spot them, then you can. But if you don't know shit about RSI or divergences, then you don't really need it. Okay. Next point: mark up whole numbers. Even is better. Trade fresh price only. Okay, that second part is what's going to kill most of you guys if you don't understand. Trade the fresh price only. Okay? And what I mean by that is if it hasn't traded through before, then that's what you want to trade. Okay? The only time I would trade a whole number that isn't fresh is if it's this scenario. Okay, where old support equals new resistance. Okay, for example, that would be the 1.3. Okay, matter of fact, I'll go ahead and mark it up. And I think I spoke about this in my other video already in one of the other lessons. All right, the very first time the 1.3 trades through, you trade it for sure. Okay, that's what I did on my options account. I made a few $100. It was a good day. It was a good week, rather. It was a weekly swing. Okay. And that was a very profitable trade. Now, eventually, a couple days later, it did push through, which kind of sucks. But if you look at the overall trend, it is in a downtrend. So technically, I was fighting the trend on this, but it was a 1.3 massive figure, so it was okay. But It traded through, so now we're getting some sort of a retest, okay? Especially, well, at least on the weekly, okay? That daily order block you're not going to see on the weekly time frame. It's not letting me zoom in anymore. Okay, well that's as small as I can get, or as big as I can get it. So since it broke on the daily and weekly, that 1.3, since it was support, a whole number specifically, old support, okay, is going to be new resistance. So we trade under around 28, 27 for a little bit, 26.50. Then we come back to quote unquote retest the 1.3. Okay? But that daily order block is going to be where you want to sell it at, which was at the 30-36 level for an end of week swing. Okay, down to the, what is that? 29.50. All right? So there's your end of week, end of month swing. Old support is new resistance. Okay? That is the only non-fresh whole number I would trade, if that makes sense. Okay, and now I wouldn't trade it at all because now we traded through another week and we've got like a spinning top, whatever you want to call this. Okay, so the new week's going to open up, and yeah, so I just wouldn't trade this for a short anymore. But yeah, that's the only exception to that. All right, so marking up the whole number is what I used to do on my charts, and I got rid of it because I post a lot of my charts online, and I don't like to be messy. Okay, I'm going to stay in drawing mode because I'm going to draw more than one line. What I would do is I would have a line at every whole number. So it'd be 27, 28, 30, 32, 34, 36, and then 38. So this is what my charts used to look like. On every chart, it would just be all these horizontal lines, okay? Which is great, okay? Because when you're first starting out and you're not used to the whole numbers, this is good to have. Because then you start to see it and you start to get that experience under your belt that, hey, you know what? These horizontal lines do really fucking work because there's specific price levels, okay? But I don't have them anymore. But this is definitely how I used to have them. So if you need to, go ahead and mark those up there, okay? This is going to be a little bit harder to explain because I really haven't gone over Fibonacci too much in these lessons. Mark charts with Fibonacci retracements. These can often be used for take profit purposes and continuations. So for example, yeah, that overlap that I put in my video about this trade, we had a 61.8 retracement. So let me delete all this shit.
For more information on Snapped, go to oxygen.com.
Okay. Fibonacci retracement tool, okay, drawn from the swing low, okay, the very low up to the swing high, right? You want to be aware of the 61.8 level, okay, which is right there. Then we can delete our Fibonacci. So you just have to be aware of where that level is at. So let's just say you were short. For whatever reason, you were short up here, right? You saw the daily bearish order block. You were like, John, I'm selling this shit. So you sell it, you get the gap down, and the price continues lower, all right? And now you're in all this profit, right? Because I did sell the GBP up here on one of my other accounts. All right, and you're like, oh, damn, where do I take profit? And say you just didn't give a fuck about the swing low. So you're like, well, where do I take profit? Okay. The 61.8 is great. Well, the 50, first of all, is good to take profit. But the 50% is not always a reversal level. Okay. The 61.8 is respected way more than the 50% level. Okay, and the 786, 88.6 are best for overlapping with the order blocks. Okay, so I doubt price would push past the 61.8 down to the 786. Okay, so my take profit would be that 61.8. All right, But if you weren't short and you didn't want to take profit, you wanted to go long, then instead of taking profit, you would go long. Okay, that's really the simplest way to put it. Because the 61.8 is good for reversals. All right. I generally don't use Fibonacci extensions too much. Okay, that would the on TradingView, that's right below the fib retracement. It's called a trend-based fib extension. Okay, it works the same way. It would be a swing low, let's say to this swing high, and then back down. Okay, so if you were looking at just this, right, price is trading up, and you want to short it, then you could pick one of these levels, the 127 or the 141 or the 161.8. Okay. Now, obviously, the 141 didn't get hit, and the 127 it did kind of trade through a little bit. So in this scenario, fib extensions don't always are perfect turning points. Okay, which is why I don't use them. But if you need somewhere to take profit, then there's no problem picking a Fibonacci extension, because sometimes they do hit and then will reverse. But again, fib extensions are just not my not really something that I use very often. Okay. Yeah, that's the next point. Mark charts with Fibonacci extensions. These can often be used for take profit purposes. Next point, look for market confluence, meaning divergences and whole numbers, or Fibonacci extensions and whole numbers, etc. The more overlap, the better. Okay, that's a great point, which is why, again, in my video, there's usually more than one form of analysis telling you the same thing. Okay, in our GBP USD example, we had a manipulation and a 61.8 overlap. Okay, so that's two different things telling you to go long. All right, so that's what you want to look for. And you had the divergence, so that makes three. It makes three things to tell you to go long. Okay, then you had a gap down. So now you want to fill that gap, right? Okay, that's four things. That's four different things telling you to go long on GBP, okay? And it worked. All right, so there's that. And then the whole number, if you want 28, that makes five. That's five different things telling you to go long. All right, that's just overlapping form of analysis, and the more the better. The only thing we don't have, I think, is an order block, and that's all right. Look for divergences between the euro and dollar using the overlap feature. So that was what I showed you guys 2 videos ago, or last video, I'm not sure, where what I'll do is pull up the Euro USD. I've got it over here somewhere. I've got a long list of stuff over here. Here it is. Dollar. Okay, so that's where on TradingView you'll get something like this. All right, and I'll look at both. All right, and I'll look for divergences between the two. All right, so that's going to be one making a higher high and the other one not making a lower low. Okay, and I have a couple of YouTube videos already of that, but I'll show you guys again. Okay, look at this scenario right in here. Okay, what you have is the dollar moving sideways, right? Because that's a double top. All right, and then you have the euro pushing higher. Okay, so what that's telling you in this scenario specifically is that the euro is being accumulated. Okay, because if it wasn't being bought, then the euro would have made a double bottom, right? Because double top means double bottom, because this is an inverse, right? But it's not. It's not making a double bottom. It's making a higher high. So this is showing buying. All right. So now what I'm going to do is take the dollar away. I'm going to take this box away. Okay. And so you can see that from that divergence, it continued higher for a little bit. Okay, up into there's probably this is a bearish area because of this strong down move. So we get a lower retracement from there. But either way, you could have ridden this for however many pips that is. All right. But a lot of the times with a euro dollar divergences, you'll get major lows and major highs. Okay, I lost the dollar again. I literally just had it up here. I don't know. But yeah, so there's that. And that's really about it for the most part. That's really all my trading is. Okay, is the whole numbers, the order blocks, the manipulation, the stop rates. And that's about it. That's really what moves the market. And then with the Fibonacci overlaps and these divergences as well. So that pretty much sums it up. Putting it all together really is just focusing on all those forms of analysis and just paying attention to your time and paying attention to major price levels. Okay, and again, that's why I tell you guys to go from the weekly to the daily and 4 hour and lower. Okay, but yeah, that'll pretty much wrap it up. I will send this over to you guys that you can add, so you can have this for your own notes, or if you want to add to it or take away from it, you can have it. You can print it out, you can study it, whatever. But I made this a few months ago, and I haven't really changed it. So, is there any questions that you guys have so far? Oh, that divergence low was a low for all of this over here. I think. Yeah. But yeah, Karan, that'll pretty much sum it up for today.